Hi everyone, I'm Chad Shoop, the editor of Automatic Profits Alert, and today I wanted to talk about a topic that a reader recently brought up to me, and that's the idea that all these tech companies like Apple and Cisco and Intel are able to repatriate their overseas money, their overseas cash, and bring it back to the United States to invest. Now they were looking at it as a great opportunity to buy these stocks as they were going to start making these big investments either into the US or elsewhere, that they were just going to put this cash to work, and that was going to be a great opportunity for these stocks to continue to grow, and they were wondering when was the right time to jump in. So my little 2 cents on this issue is that I wouldn't buy these stocks because of that. It's not that there's anything wrong with any of these stocks. If they got that sort of cash, like Apple, who has one of the largest cash piles of any stock, I think still the largest, they're still great, sound investments, okay? But to buy them on the fact that they're bringing money back from overseas, I don't see the real benefit there. And that's because I know that these tech companies, they've kept that money over there as a strategy, okay, as leverage on Congress to give them this repatriation tax holiday to bring the money back over here. But that hasn't stopped them from spending, because many of these companies have taken out loans where they're paying extremely low interest rates. So they've brought on debt that's at or more than the amount of cash value that they have overseas. So they haven't really waited to invest this cash or anything. They've just left it over there and then leveraged that by building debt out on their portfolio. So their investments are already done, and their growth pattern is already set. So I don't think it's really going to alter the landscape of these stocks. Now, tax reform is a separate issue where many companies are seeing the benefit of that over the next several years. Tech companies, not so much, because they've already done enough to kind of lower their overall tax burden, like leaving their money overseas and elsewhere. So they don't see as much of a benefit from that. But when you also look at that, I think that's been building into the pricing into the market over the past year or so since Donald Trump was elected, on the premise of he ran on the premise of lowering corporate taxes. He's been promising that all year. They finally delivered in December of last year, and the market still rallied on that news. But I think at this point, all of that is priced in. Okay, we're seeing it in this earnings season. A lot of companies are announcing how much of a benefit they're seeing from tax reform. But going forward from this earnings season and then for the rest of the year, I don't think tax reform is going to lift the stocks. They're going to have to start to develop on their own and continue to show that they can continue to grow their businesses at a fast pace. So going forward, I don't think that the repatriation of their cash is going to be a big issue to help fuel the stock higher, or tax reform anymore either, considering that it's already rallied for the past year on the premise of tax reform being accomplished. So that's all for my video today. If you liked it, be sure to subscribe to our page. Continue following me and my other colleagues for our great insights. Until next time, this is Chad Shoop with Automatic Profits Alert.